right, hey, what's going on? This is Dan Keller, mortgage advisor and branch manager at Guild Mortgage. Hey friends, I hope you are well. It is June 1st, Friday, June 1st, and I want to welcome you back to another episode of Making Sense of the Markets. Today, I'm going to spend 3 total minutes. The first minute, I want to talk about rates. Holy cow, 2.5 weeks ago, rates were in the 5s. Can you believe that? 30-year fixed rates. Again, depending on your down payment, your credit score, and the type of property purchased, we're over 5%. It's the first time I've seen this since I first started back in 2008. Didn't last long. Came right back down last week. And I was kind of advising my clients on that they would. You just would have to bear with the markets. Italy announced that they were, remember a couple of years ago you heard this whole Brexit thing? Well, Italy was on the verge of defaulting on their debt. It caused our Dow, our stock markets, to drop, and mortgage bonds improved as a result of that. I've talked a lot about investments either being in stocks or bonds on Wall Street, and that's exactly what happened. Mortgage rates improved. We're back down into the mid-5s, 4.6 to 4.7-ish, depending on credit score, down payment, and type of property purchased. But that is good news. I think that's going to be our sweet spot for a while. So I wanted to address that. The second thing I wanted to address is we're starting to see changes, program guideline changes. Some for the better, some for the worse. The one I want to talk about today is for first-time homebuyers. It's tightening up, making it a little bit more difficult for first-time homebuyers, and that's relative to the USDA zero-down home loan program. I'm okay with this because that program, you have to understand, has income maximum household income caps in order to qualify for that program. And based off of certain areas, the median income in those areas have now exceeded the cap, so they've eliminated certain areas for being eligible for the USDA home loan. Lake Stevens, for example, in Snohomish County used to be a 100% eligible area, no longer. So attached to this video, or if you're seeing this online or in an email, you're gonna see the side-by-side screenshot of the current USDA eligible areas versus the proposed. The other thing I want to talk about is USDA the right home loan program for you if you are a first-time home buyer or if you do not currently have a mortgage. You don't have to be a first-time home buyer exactly to buy with the USDA home loan program, but you cannot have an existing mortgage. Is it the right program for you? Most of the time when I share this loan program with clients, I'm comparing the FHA loan program versus the USDA home loan. So again, down below you'll see a side-by-side comparison of FHA versus USDA to see the pros and the cons of each loan program. Essentially with the USDA home loan program, you have to meet property eligibility requirements, meaning it has to be in a USDA eligible area. The link will be down below so that you can type in an address or look at certain regions all across the Snohomish, King, Pierce, and Skagit County. The other thing is, again, you have to fall under the max household income cap. So I'm gonna also send a link to my USDA down below, a link to my USDA concierge page. Helpful information. If it's not relative to you, maybe share this with someone that you know. But get these changes out in the marketplace. They're healthy changes. The housing market's looking really great. I like where mortgage rates are at right now. And share this news. If you have any questions, please reach out to me. I look forward to being a resource to you. My contact info, that's my cell number. It's on the screen. And hey, have a great weekend. I think the weather is going to be beautiful. It's beautiful right now. So get out and enjoy the beautiful Puget Sound, okay? Bye for now.